On this week's episode, we talk to Lewis Casserley from Albatross Capital. We talk about starting a new lender at such a young age, what Albatross Capital does, and much more. Like, subscribe, and now let's spend 30 minutes in finance.
I'm Lewis Casserley, co-founder and principal of Albatross Capital. We are an award-winning bridging finance provider based in London. We've been going since 2020, founded by myself and business partner Jordan Fernley Brown. We offer everything from auction finance, refurbishment loans, second charge lending, cash flow loans, everything except from kind of ground up development and land bridging. That's kind of where we are, from 75,000 up to 10 million pounds. We're currently a relatively small team of 6 people made up of sales guys, sort of back office administration and underwriters. And we're on a bit of a mission to disrupt the market. We're recognised, I suppose, more so from a service point of view. The big thing for us is being quick and being honourable and transparent in our approach, which is kind of the whole reason we got into the industry, which can sometimes be perceived as a little bit murky and a little bit dirty. But myself and business partner are from a regulated background, and we're trying to bring the same approach to an unregulated sector. But so far, so good. So it'd be good to discuss a few things further with you today.
Yeah, well, thanks for coming on firstly. That was, one of the better intros that we've heard, so appreciate that. For kind of everyone again listening, are we able to sort of turn the clocks back a little bit? And you mentioned, obviously, you came from a regulated background. What were you doing, and sort of how did you sort of go about deciding to actually start a lender of your own?
Sure. So Jordan and I went straight from we met at school when we were 11 years old, so we've been best friends for some time now, and we kind of skipped the university and further education side of things and went straight into the city when we were 18 as stockbrokers. Okay. It was an interesting time. I mean, we learned so much, particularly from a sales point of view, going in commission only, 300 calls a day, getting told to bugger off 95% of the time you make your sales calls, and I think it was kind of just bad timing for us, really, in terms of the market has shifted quite a lot since you watch all of the stockbroker films over the past 10 years or so. But what we found was quite quickly, really, so by sort of 21, 22 years old, we were running our own stock brokerage out in Surrey, and a lot of our kind of investors and clients were actually property developers. So we were trading the markets on their behalf. It was a kind of diversification mechanism for them. But from conversations that we were having with them, quite often they'd sort of come to us and say, we're looking at doing XYZ project. You guys are money managers. Do you have anyone on your books that might be able to come on as, in a joint venture with us, or lend us some money to assist with this project that we're doing? And it was happening quite a lot. And for a period of time, we were kind of matching up our investor network in the property space. So, investor X would lend to investor Y, and they would go into a property transaction, and we were just kind of the middlemen, sort of brokering transactions. And it became quite a integral part of what we were doing. And as it so happened, a close sort of family friend of mine down in Exeter was also in bridging finance and doing very well. And Jordan and I kind of looked at each other as sort of young, spunky 22-year-old lads, thinking, why don't we have a go at this? This seems to be a better business than what we're currently doing, trading the markets and not always being so successful at doing so. So it was, looking back now, it frightens me, I must admit. We were 22 in a garage in Surrey, Jordan's parents' garage, which we converted into an office. It was KT11 on the outside and W1 on the inside, we like to say. And we kind of looked at our investor base at the time and basically went out to them and said, this is the business model: lending money in a secured way against property to good people. Your returns will be fixed, they'll be asset backed, unlike trading the markets where things can go up and down every day. Does anyone, want to jump on board with us? And as it so happened, we had one investor who basically turned around and said, you know what, I'll give you guys 100 grand if you pay me a fixed percentage per annum and just see what you can do. So we kind of went out, no lending experience, no underwriting experience, not really knowing which direction we were going, and just picked up the phone as we would as stockbrokers, put in a Google search, mortgage brokers in the UK, and made calls for about 6 months, I suppose, until we've eventually found a deal that kind of fit our initial criteria, which was basically anything that of 100 grand or less.
Yeah.
But equally in that time, to be fair, what we did was kind of act more as kind of new brokers in the market. So we were going out and meeting lenders from all shapes and sizes, really, and sitting down with them and buying them a coffee and picking their brains. And to be fair, from that, we were able to create a kind of initial business model, kind of learning all the do's and don'ts and right and wrong ways of running a lender, from what we'd learned from some of our lending peers. So eventually, as I say, back in this was 2018, the first deal came in. We had a legal firm dealing with it, and the whole thing took about 4 or 5 months to get over the line. But eventually we completed our first loan at the age of 22. And looking back now, it was quite scary, thinking, we would just jump in the car, drive to the site, stick our finger up in the air and estimate our own values of the asset and lend accordingly. And to be fair, as it happened, that particular borrower has been back to us 5 times since, and the relationship's been great. But yeah, casting back, I mean, this was pre-Albatross days. We have another lending entity which has become a little bit more of a private fund now, called Edgley Finance, which we founded in 2018, and we just basically operated as a bit of a lifestyle business for a couple of years. It was very much go out, find the deals, get the deals in, issue terms, and then worry about where we're going to raise the private capital. We made some pretty dreadful mistakes along the way, and a lot of people kind of look at us now and say, well, these guys clearly had it quite easy. They've jumped into the market. They've never seen a downturn. They've never had a loan default or a repossession. Wait until that hits and then see what happens. But the first couple of years were so difficult, not only from trying to break into what is a very congested market already, but being 22 in a garage without a track record, without any significant deal flow, and certainly without any capital behind us. The main issue was actually raising the money to lend. I mean, the amount of times we had perfectly good deals on our desk that we'd issued terms on and gone out for valuations and whatnot, and then we got to raise the money. It was I wouldn't wish that on anybody. But yeah, it's kind of, it all started from there, really, and it's been an organic process where Jordan and I have kind of retained sole ownership between us, and tried to grow it properly and slowly, and make sure that we are always sort of walking before we run, and not taking on unnecessary risks or overexposing ourselves to too many overheads or anything like that. And it's kind of got us to where we are. But just to cast back, this was all going on for a couple of years, and then we were basically in discussions with another party to try and ramp things up a little bit and convert it from what we found was that sort of being young and ambitious, and we kind of made quite a lot of noise on LinkedIn and various social channels um, to try and spur business and create a brand within the industry. And our personal brands were starting to gain traction. So we looked at it and thought, well, actually, there's a bit of an opportunity here, given what we've learned and what we've done, to scale things up a little bit and maintain that sort of fast, reliable, lean approach, but on a slightly bigger scale. So I suppose by chance, more than anything, beginning of 2020, as we were looking to commercialize the business, we went through a bit of a rebranding where we effectively founded Albatross Capital, where we had a little bit more private money. We negotiated a funding line with Shawbrook Bank, who have been incredibly supportive from the outset of our journey in bridging finance right up until today, where they continue to support us immensely. And then all of a sudden, COVID hit, and there was a lockdown, and a lot of people stopped lending money. A lot of people changed their criteria, their terms, pulling out the industry. Funding lines were pulling out. You know, it was a bit of a dire time, and we kind of used that as an opportunity to say, well, actually, Albatross has been formed. We were founded to help support the market during this difficult time. We're heavily privately funded, so we make our own lending decisions. You know, come and give us a go if your existing provider has dropped off and deals need to be funded. So I suppose more out of luck than judgment. And COVID was a dreadful time, but dare I say, for us, it was an opportunity to get a bit of a leg up and give us a little bit more of an equal playing field in the industry. And to be honest, that the article that went out with Bridging and Commercial in April of 2020 just exploded, and the phone started ringing like it never had before. And that's kind of really where things started to properly kick off for us. And then since then, it's just been a blur. I mean, I can't believe that was 3 years ago. We were talking about it this morning. And it's gone from strength to strength for us since then, whilst, you know, having a key focus on maintaining those core principles of just providing the best service in the industry and ensuring that, you know, when a deal comes in, at the moment, we're lucky enough that it's Jordan and myself that make the lending decisions. So we gain a lot of traction from, you know, brokers and borrowers being able to call us up and getting pretty much a credit back kind of agreement in principle there and then. And then the whole process is streamlined to completion, you know, at whatever time suits the borrower more often than not. And it's that speed and reliability and trust that, as you grow, becomes difficult to maintain. But it's why we're kind of going slow and steady and ensuring that those service levels continue throughout our growth.
Yeah, no, it's really interesting. And obviously, you went on to then win, I think it was the best newcomer in the
right.
Bridging and Commercial Awards, wasn't it? So, which is, you know, that just goes to show, obviously, that people were recognizing that you were making a bit of an impact. And you mentioned, obviously, you were, or you still are, very young. Did you find that your age was at all a hindrance, or were people pretty open to sort of working with you guys, despite obviously being fairly sort of baby-faced?
You know, it's sad to say, but it was such a hindrance, and it still is. You know, we Jordan and I are 28 now, and we've spent the majority of this year looking at how we can improve our funding and how we can diversify our product range, which normally means bringing on new funding providers. And, you know, sitting in a lot of these big bankers' offices and family offices, and, you know, whoever else, it's kind of, well, you're 28. What do you know? You know, you haven't got the grey hairs. You haven't you haven't been through, several recessions, you haven't seen this, you haven't seen that, and so that continues to be a hindrance. And we've always tried to say, well, let our loan book, let our success rate on redemptions, let our internal processes do the talking. There's only so much that Jordan and I can use our motor mouths to convince the credit committee. But do you know what? You mentioned the awards. That was huge for us. And that sometimes you look at awards and you think, well, how important is that? And what does an award actually do? It's just a trophy on a mantelpiece. But that was 2021. So Albatross was only kind of a year in the making there, and we were still, at the time it was pretty much still Jordan and I in a garage, and we won best newcomer in the industry. So we were dead chuffed. And actually what happened then was we were kind of on the map a little bit more, and we'd been badgering the doors of the big brokers saying, give us a deal, give us a try, going into the office and then buying them all beers or whatever it was. And 6 months later you review it and you've not had any deals, or the ones you do get, you just know are going to be impossible to do.
Yeah, we know that feeling.
Yeah. And the next day the phone starts ringing, and it's these people that we've been trying to do business with for what was a good few years, because we'd had that recognition. And you talk about reliability and trust. Well, if we've won an award, maybe we're doing something right. And again, that was kind of the next leg up for us. So that those awards were in September of 2021, and Q4 of 2021 we lent more than we did for Q1, 2, and 3 of that year. So the award was definitely great for us, and don't get me wrong, we've played on it hard and continue to.
Yeah, it's shining.
But yeah, yeah.
Bling.
But you're what do you say about age? It's definitely a hindrance. But this is a market that is continuing to grow and continuing to become more dynamic, and there's always new entrants to the lender space, and there's always people trying to introduce new and exciting ways to what is a very traditional industry. And largely it's made up of sort of industry fat cats and people that have been in the industry for a number of years and probably have banking experience or accountancy experience or whatever it may be. But we're still a very young team, and we want to continue bringing in young people who can bring a fresh and dynamic approach and work hard and grow with Albatross. And it's the new guys coming through that are going to drive this industry to new levels, we hope. And so that's been a big thing. That's been a big thing for us. But yeah, certainly it's not been easy.
Yeah, I always wonder with something like that, and when you go into those meetings and trying to get a new funding line or something of that sort of ilk, when they sort of say, oh, you don't have enough experience, an interesting sort of question that I always wonder is, what do they expect to see? As in, what actual number do you need to hit? How many years do you need to have had for them to then be comfortable with you? Like, is it literally, is it just a vibe they get? Because I guess it's a tough one to ask. And if you were sort of starting again, let's say you had to do Albatross 2.0, what sort of things would you do differently sort of going forward now?
Yeah, sure. So I think just to begin with, from the kind of being in front of the funding providers and raising the money, it seems to be that what they want to see is depth in a team. And a lot of the time that can just come down to putting an investor putting a presentation together and having the suitable amount of non-execs on the credit committee and the suitable amount of years of experience and domain knowledge and experience on the investor deck and sitting around the boardroom table. And I think we all know that a lot of these non-execs and kind of outsourced figureheads don't actually do an awful lot in terms of the day-to-day running of the business, but it satisfies credit committees from the large funding providers. So that's something that, to be honest, we've looked at. And actually, Kevin Cook, who still remains our chairman, has been a really supportive, not only private investor for us, but someone that came on when we were finding it difficult a few years ago, having just retired as senior audit partner of BDO, to basically come in and provide the banks and the institutions with that level of certainty that we know what we're doing. And, being from a corporate background, what he was able to do, which has, to be honest, enabled a lot of our funding, is sort of the internal processes and systems and controls of the business. So, from CRM systems to strict kind of underwriting regimes to even down to how we work with our employees and ultimately how we hire. He's been sort of integral in providing that sort of corporate approach to help Jordan and I, who ultimately have always basically came out of school and just wanted to do everything on our own the whole time. So it's good to have the balance at management level. But also from a funding point of view, where we've struggled over the years is that, we've not ever had the cash levels in the business to be able to sort of stump up the equity requirements that go alongside the senior debt providers. So Albatross 2.0, there's not a lot I would change, just because I think we've come such a long way on our own, almost as the two of us, and kind of done things differently to the norm. Most lenders come in, they've already got a big pot of cash. They've already diluted themselves down in terms of their equity involvement in the company, and they've gone out and raised cash, and everything, from actually getting money out the door is pretty straightforward. For us, we've kind of came arse-ended into it, in that we kind of set up a lender without any money.
It's kind of a key thing with most lending.
Yeah, exactly. So don't get me wrong, there's ways we could have catapulted ourselves up the charts in a shorter space of time. But we kind of made our mistakes and learned our lessons on such a small level that we've kind of been able to grow it slowly but surely, to a position where now actually we are being taken more seriously from funding providers. But yeah, 2.0 Albatross would probably mean more people at management level from day one, slightly more capital input from day one, and for Jordan and I to bite the bullet and dilute ourselves down from an equity shareholding point of view, to basically bring in some deep pockets that would then unlock the key to the institutional funding from an earlier point.
Yeah, it sounds as though obviously the position you're in now is probably favorable to that in the sort of short to medium term to long term, as if you have that majority sort of position still. Obviously, as you grow, as what is the sort of end game? Are you sort of looking to do this for a long time, or grow it to a point where you can potentially get bought out, or you're not thinking of that just yet?
No, we're not. I mean, I think what excites us is that we're 28 years old. We've now been lending for, give or take, 5 years. We like to think we know what we're doing, but we're still learning every single day, and we're still building new relationships every single day. And even looking at the competition, looking at the market, looking at the size of the market, and for us, we're kind of straightforward bridging lenders. We don't do anything particularly different or kind of revolutionary at this stage, bar service, but that only takes you so far. So the fact that Albatross still only operates in such a small segment of the specialist finance industry, what excites us is that actually, our kind of 1, 3, 5 year goals are very much to increase product offering, grow the team, expand the book, expand the funding available to us, so that eventually we can kind of bring our brand and our approach and our kind of speed and service to other areas that we're not currently operating in. And to be honest, for us, it's kind of there's no exit plan. We would 20 years time, we're still going to be fairly young men, and by that point, we hope that we'll have one of the biggest, if not the biggest, specialist lending business in the industry. That's the goal, to be honest. There's no exit route or capital event for us. It's how big can we grow this thing.
Well, I like the sound of that, and I'm sure if someone came up, and if anyone's listening has £1 billion that they want to buy Albatross, I would imagine that might sway some things, but it could be worth a lot more than that. You never know how things go.
Hey, look, I'm always open to offers.
Yeah, we've talked a lot about you, and obviously I'm conscious of the time, and I want to make sure we sort of touch on what Albatross does a little bit more as well, just so if anyone is listening, are you able to give people I know you touched on it right at the beginning, but a little bit more flavor and maybe some quick examples of some of the deals that you guys are taking on at the moment, and sort of where you are rate wise and loan to value, etc.
Yeah, sure. So firstly, we've maintained fixed interest rates throughout the chaos of the last 6 to 9 months. I think it's important, or we certainly find from our sort of borrower base, the importance of solidity of funding and solidity of the cost of that capital is more important than ever. So, sort of what Albatross has always tried to do is listen to the market and adapt and provide what the market wants at that particular time, if that makes sense. So, for us, in October, when the mini budget came out, we introduced a new product called the 48-hour rescue bridge. That was a time when the market was pretty volatile and interest rates were going up rapidly, and funding lines were being pulled, or cost of capital was changing, and therefore specialist lenders naturally had to adapt their pricing or pull out of transactions in the 11th hour or whatever it might have been. So what Albatross's 48-hour rescue bridge effectively delivered was, if you're in a transaction and you're buying a property tomorrow, and all of a sudden your finance has been pulled because of our ability to move so quickly, and at that point, naturally legals are 100% there, the valuation's been carried out, everything's kind of in place. We have the ability to step in and complete that transaction for you on time, to risk charges or losing the property or whatever it might be. So what Albatross tries to do is kind of just bring, as I say, the young, dynamic, rapidly quick, transparent approach to bridging finance, unregulated bridging finance. We don't do anything drastically different. We're not the cheapest. We're not the most leveraged. We don't take unnecessary risks on asset classes. We don't touch on commercial property all that much, although it's something that we are pushing a lot more at the moment. But if you're looking for kind of good, solid, transparent bridging finance, up to 75% loan to value, interest rates at the moment are ranging from 0.85 to 0.95% per calendar month. So again, as interest rates have continued to go up, we were kind of always slightly more expensive, but I think we've sort of maintained our cost of capital kind of pretty much where it's always been. So the market's kind of caught us up from a price point of view. So now I would say we're pretty competitively priced at that level, and we'll fund anything from 75k up to 10 million pounds. We've always been well renowned for our smaller transactions, being Albatross Capital, a lending hand to help you spread your wings. We created a specialist product called Mini Wings in the early days, which was loans from 75k up to 250k, sort of deal sizes that a lot of brokers and a lot of lenders can't be bothered with the hassle with, and it's more of a pain for them to do it than not to do it. But so we came in, that smaller end we're very good at. We're very competitive from a price point of view, as well as speed and leverage. But in more recent times, we've stepped into the larger deals. We like to think we're very good at second charges. We do everything ourselves in terms of obtaining consent and dealing with the borrower's first charge provider and doing all the administration from that side to take that away from the borrower and the broker. And we also do a lot of kind of complex offshore structures, third-party first charges, things like that. So there's an element of quirkiness, but it's always been the ease and simplicity of dealing with Albatross that has kind of enabled us to become a market-leading brand in bridging finance. We also offer refurbishment finance, so light, heavy refurb up to 70% loan to cost, and that's factoring all costs into the scenario, everything from build costs to professional fees to the purchase price or the current valuation of the property at that time. And we'll offer drawdown tranches kind of throughout the transaction in accordance with the success of the project throughout. As I say, what we don't do is lend on land, and we don't currently offer ground up development, although that might be changing quite soon.
Well, that's an interesting little, because I was going to ask, you mentioned earlier, obviously expanding your products is something you want to do, and development one is a good one, and it is very difficult, especially at the smaller end. There isn't many players in there, and I guess you say you're not the cheapest, and you're not you don't go to the highest loan to values and everything, but do you find that a lot of the sort of brokers come to you because they need that sort of certainty? Because we definitely find that with our lending, that it isn't all about the price always. Sometimes it is, and that's absolutely fair enough, but when somebody has to do it, and I guess your 48-hour rescue sort of product was just exactly for that people don't want to muck about. They just want to get the money, get it done, and then they can actually crack on making money with their project.
That's it. I think the market post October, we definitely think has shifted. I think there's less of an importance now on price, because competitors, based on where cost of capital to a lot of our lending peers has gone, they're not able, unless they're running at a loss, they're not able to drive rates down into the floor. So it's definitely sort of leveled the playing field from a rates point of view. And given what's happened in the last 6 to 9 months, brokers particularly, as you say, are looking for reliability. It's the most important thing. You talk about on a cost of capital, you're talking about no more than 50 basis points a lot of the time. And if that's the difference between a broker being able to call the Albatross office and get a solid answer and know that they're going to deliver the funds in a week's time and everything's going to be hunky-dory, that's worth 50 basis points all day. So that's the big thing for us, and it takes time to build that trust and build those relationships with the brokers, and it also takes proof of concept and things like winning the awards, as I say, that kind of puts you on the map and lets people give you a go. And every time we do a transaction, I think we only further build our relationships with our brokers, because we just do what we say we're going to do, which is a bizarre kind of selling point, because that should be pretty standard, but we seem to be in an industry where that's becoming rarer and rarer. So yeah, just doing what you say you're going to do, and doing good business, and being honest. And from the outset, we often lose business because a deal will come in, and we'll be honest, and we'll say, do you know what, we're not going to get to 75%, or we're not going to be at here, we're not going to do that, but what we can offer you is this, this, and this, and you can have the funds by Tuesday next week. And from sort of under promising and over delivering, eventually it works in your favor. But the amount of business that we turn away from being honest, that they go to another lender who promises the world, and then all of a sudden that deal comes back on your desk a week later, and the clients ended up spending more money because they're now delayed on their transaction, and they're paying two times professional fees, or whatever it might be.
Yeah.
That's what we find. So it's not the most exciting model. We'd all love to pick up the phone to inquiries and say yes and agree to everything that's being proposed. But the point is, we know exactly where we're going to be, and because we make our own lending decisions, and everyone in the firm is on the same wavelength, we're not, an agreement in principle is as good as credit-backed terms as far as we're concerned. So yeah, I think that's kind of where we are. And I think it's always important that as we grow, and the sales force grows, and naturally salespeople want to get money out the door, and they want to keep their brokers happy. It's so important to under promise and over deliver.
There's probably so much more that we could obviously talk about, and I've got, as you're talking, more and more questions are coming up, but obviously I'm conscious of sort of keeping you for too long, and it is 30 minutes in finance, not an hour and a half in finance. So we'll have to get you back on at some point, if that's all right. But what I was kind of wanted to get to, obviously, because we've kind of had a good feel of what you guys are up to. If somebody wanted to get in touch with you, where's the best place to go?
Sure. Firstly, apologies. 30 minutes is the way I ramble on. It's never long enough. But
it's interesting. So if it's 45 minutes of interesting stuff, you're excused.
Sure. Well, in terms of getting in contact with us, it's best to look at our website and go to the contact us page. We all work from the office every day. We don't operate particularly from the working from home environment. So you can always catch us in the office. You can email us, call us, and one of us will be straight onto it. We also like to think we have quite a good LinkedIn presence, so you can find all of the team on LinkedIn and send us a message, and we'll be happy to assist with whatever it is.
Perfect. And I'll make sure I've got all the links to the website, etc., in the description below, and on the side for Spotify and everything. One last thing that we like to do on the podcast, which is a new thing that we're doing, is we ask a question based off what our last guest was. And the last guest we had on was a recruiter, and they recruit specifically in the lending space. And I just wanted to sort of get your feel for, obviously you've got a few members of staff at the moment. What is the sort of, how easy is it to hire, or are you actively hiring at the moment? And how easy was it to get your staff, considering obviously your relatively new business and everything?
Yeah, it is. It's a difficult thing. It's probably the most difficult thing that we're faced with, to be honest. I know that since COVID, there's been a bit of a shift in terms of how people like to work and want to work, and from people spending so much time at home and committing to various bits and bobs, in their local area, people like to work from home. And the big challenge that we've been faced with, one is the lack of good candidates in this sector, versus the demand from lending companies. So naturally, the supply and demand gap has driven wages to new levels, which some of them are pretty crazy. And but more so, it's Albatross. The big thing that we try and install into the business is a culture that people want to come into the work, want to come into the office. They want to help grow the business. They share our passion and our vision, and everyone gets along well, and everyone enjoys being in the office. So where we've struggled is that everything from junior admin right up to senior underwriters is that people want the flexibility of being able to work from home 2, 3, 4 days a week. So for us, the difficulty is, well, how do we build a team and a culture of people that want to stay with Albatross from now right up to sort of peak growth, if people aren't all in the office getting stuck in? And for us particularly, because of our service levels, a deal will come in and it will bounce around the office, and everyone gets involved and stuck in, and that's how we're able to dish terms out and know where we're going to be and offer that reliability. If someone's working from home and they're out on a dog walk, or a deal comes through on an email and a credit paper gets lost in transition or whatever it might be, it's that it's kind of that, I suppose, I'm not sure what the word is, but for us all being together in the office and working together and creating that culture is a big thing for Albatross and its growth. So definitely the challenge from a recruiting point of view is finding people that want to come into the office, at least 4 days a week.
Yeah, which as that was basically what the recruiter said was the challenge of of her job was actually trying to get lenders to give that little bit of flexibility, because just everybody wants it. Like my position is 100% remote, and you're right. It takes a lot longer to get to know somebody when it's just an hour phone call a day, you're just discussing business. And obviously, once you've been here, sort of there long enough, and you got that relationship, it's absolutely, you can trust the person to crack on with it, maybe. But yeah, when you're sort of growing and rapidly growing, I can see where you're paying them a lot of money. You want to make sure you've got a tight sort of rein in, just to make sure it's being well spent. But
that's it. And it's particularly the younger guys. I mean, we've got an office in the heart of Soho. The world's happening around us. We work hard and we play hard, and we like to work hard during the day, and we're more than happy to go out and share a drink with the team, on an evening. So it's kind of just having that kind of work-life social balance where everyone gets on and sees the big picture, but able to have a good time along the way. That's what we're all about. And as I say, for the young guys, learning the trade and being in a new industry and picking things up, it's so important to be in the office. But I do understand for the more experienced folk with slightly more, responsibilities at home and whatnot, there needs to be an element of flexibility, but it's a challenge.
Yeah, no, I agree. It's a very fine line as well, and so it suits some people and it doesn't others. But on that note, I want to thank you obviously for your time.
I would say the importance of the borrower's solicitor, the importance of the quality of the borrower's solicitor, and what that does in terms of kind of steering, enabling a transaction, if that makes sense.
Yeah, no, that's a very good question.
So often our borrowers use, they'll use their solicitor that did their grandmother's will, and they come on and they've been working for the family for years, and all of a sudden a set of finance documents come through, and a deal needs to happen in 2 weeks, but the borrower's solicitor only works on a Thursday and has never dealt with bridging finance before, and it's impossible to
it's not happening in 2 days.
Yeah, exactly. So what the quality of the borrower's solicitor does in terms of enabling a transaction would be my question.
No, that is perfect, and thank you for that. And obviously, once again, thank you ever so much for your time. I've kept you a little bit longer than was planned, but thanks so much, Lewis. Really appreciate it.
Yeah, no, likewise. Thank you. It's been good to chat.